Okay, so what is going on? As you can tell by the title of this video, this is going to be the um, basically the market review slash breakdown for December 19th. Overall here, what you can see on my screen here is both or all three NQ, ES, and YM. I just want to annotate that price here on YM. This came down into this imbalance here. ES has came down into this imbalance here, while its weekly candle body closes inside of this gap, while also trading inside of this breaker here. Okay, right at the the upper quadrant of this range here. Okay, so the wicks here to me look extremely bullish, as well as on NQ here we have this. Really, we can mark out this breaker here. So we have this breaker here on NQ, as well as this fair value gap right inside of here. Okay, so weekly looks extremely bullish. Check out the daily chart on NQ. Daily chart looks still pretty bullish. Just go ahead and slide on over here. Okay, so this is that price range on a daily chart. Notice how price pre FOMC creates a top here, and then price then trades lower with the help of FOMC to rebalance this price range here. Okay, so if we mark out the swing high up here to the swing low, we'll find something similar, which we have this backwards. Let me redo this. That swing high to this swing low. Price retraces right into around equilibrium of this range here on the daily chart, and then this looks extremely bullish if we zoom in on this specific daily price leg here from November 19th to Friday, December 20th. We now look bullish. Prices respecting the candle bodies here are respecting and closing above the 50% of this range. Okay, as well as respecting these bullish PD arrays within that range. Okay, so ultimately I do and can see higher prices reaching back up into this fair value gap, maybe even creating another high above here, above the current all-time highs on NQ to come the next weeks or the next couple of days, before then seeing some sort of retracement down to at least 19,888.50. Okay, being these or this trend line here, or all of these lows, equal lows, relative equal lows. Okay, where we have bullish imbalances down here as well that are left unfilled. Okay, so with all of that out of the way, let's go ahead and drop into the chart on December 19th. We're going to go to our 1 hour here. We're going to replay and go all the way back to midnight open. Let's dive in. So you can see FOMC from the previous day, 2 o'clock here, large bearish candles. Okay, typically the day after FOMC, is always going to be a continuation of what FOMC does here. Okay. Notice we're in extremely bearish conditions, so we should only be looking to short in these conditions, right? So we're going to draw out this 1 hour for value gap here. Okay. I'm going to mark out CE of it. Okay. Drop into our 15-minute here. Now, as price is opening up, see London starts to expand upwards, okay, inside of this 1 hour for value gap, okay. Now on our 15-minute, what else do we have? Okay, notice I tell all of my students that if we are trading a 1-minute chart, we need to incorporate a 15-minute PD array, okay. What do we see here in these candles? Right here. The gap that gets created, even though it's super small, on the candle Wednesday, December 18th at 15, 15, and 15:30 and 15:45, we create this gap here. We can also drag this to the right. Okay. So we already know we want to see some sort of bearish reaction off of these PD arrays at a key time. Okay. So we're going to continue to let price play out. Notice price is still slowly expanding into this PD array. Notice here is 8:15. We're going to go ahead and drop into our 1-minute chart here. Okay. So now looking at the 1-minute here, we can clearly see we are in a bullish expansion. Okay, this is clearly the buy side of the curve here after price has made this low here. Okay, so notice pre-market for New York starts around 6 o'clock. So you want to pay attention to the lows that form during, around the time of 6 o'clock as well as before 6 o'clock. So in our case, we have London lows here. So we want to just make sure we mark out London sell side liquidity. Now we can also mark out the lows that form around 6 or after 6 o'clock. So we have sell side liquidity here. Let's continue to watch price play out here. 8:30 releases, usually a time where high impact news occurs. I do not believe we had a high impact news this day. Let's go back and check. This is December 19th, as we said. Open up a new browser, Forex Factory. December 19th, we had news at 8:30. Okay, so we did have news release at 8:30 here. See where that reaction gives us. See what 9:30 does. So already looking here, upon the open of 9:30, we release initial sell side liquidity right here. Okay, so 9:30 typically expands or consolidates, right? Usually when it expands, what's happening when it's expanding is it's purging some form of liquidity, which induces new liquidity to be taken out later in the session. Okay, so this is how we can use 9:30. So notice right here at 9 o'clock, we have a low form inside of here. Keep on playing it. 9:30 releases, price comes up. What do we have here? That is our classic bearish turtle soup. Now notice how price is respecting the midpoints of those two gaps that we drawn out earlier. So now we're looking for price to continue to climb lower, and now we can frame an entry or look for setup. Okay, so our turtle soup has formed right here at 932 inside of our PD array. We're going to continue to watch price play out. And now specifically here, what we want to see is price eventually climb below this area right here. And we want to see this area in price become a breaker. Okay. We want to see this area in price become a future breaker. Notice where we are. Okay. That can be another opportunity to sell. Okay. So what I'm going to do is go back here, this next candle here. Okay. So we're waiting for this candle to retest. Sell through here. Our stop loss is going to be above the highs inside the imbalance. Now notice how we partial. So now we're going to wait for price to patiently start aggressively trading lower, and specifically trading lower through the breaker. So speed up price, see what price does here. Okay, we can buy one at this level here. Stops now can be moved to cover cost. We'll take another partial below these lows here. Now at this point in time, we would like to see price aggressively trade below this low, while also respecting it as a breaker. Okay, so we also want to partial here at this newly formed breaker if we can get a close below. Price is yet to close below that sell side liquidity. Notice how price here, as we are trading in high resistance action here, this is obvious high resistance action. Our entry here inside of the PD array is well respected, and very, very low risk. Okay. At this point in the trade, as prices close below this low, specifically here from 9 o'clock, that initial sell side liquidity, we want to see price trade below that level. And then while we're below that level, we want to see price respect that level. Okay. So notice at this point in the trade, we're waiting for 10 o'clock to open up, and we're constantly wicking into this level, specifically being that breaker. price at this point closes below that low, would take another partial. At this point in time, we're going to reduce risk, stops going above the high here, and now we want to see price aggressively trade below that level there. Okay. Price comes all the way back up inside the first presented fair value gap. First FEG of the day. And then let's pay attention to the quadrants. Okay, price trades up into the 50% or equilibrium of this fair value gap here, yet one more time upon the open of 10 o'clock. So notice 10 o'clock's power of 3 here is an open high and low close because we're bearish. Okay, so price at 10 o'clock opens up. Okay, we accumulate a little bit, we open high, low, and then we close. Okay, so now at this point in time, we're expecting price to respect bearish PD arrays while heading towards a discount. Notice price here. What the fuck happened, Goose? Cat's going crazy. Yeah, that's funny. That's crazy. But notice how price comes up into equilibrium of this fair value gap yet again. At this point in time, we're going to now trail our stop loss to the swing high that formed after 10 o'clock that respected the 50% of this imbalance up here. We do not want to see price retrace into or above this high here. Okay, we formed another area in price where we should see price respect, which is this imbalance here, and the swing high provided inside of here before then the displacement lower below this low. Okay, now while we're watching this, this is also now a breaker. Now we want to see how price trades below the low here with the gap. Price comes up, trades into the breaker and the fair value gap. Candles do not close above the breaker. Price comes back into this gap. We finally get a close back below the breaker. Price is in high resistance. It's right here. Would probably take full profit slightly after 12 o'clock. Okay, so notice the entry here coming shortly after 9:30. As we've understood, we created sell side liquidity here upon the opening of the 9 o'clock 1 hour candle. Notice that is a key time Notice we have sell side liquidity here that formed around 6:30, which is pre-market. Pre-market, remember, we were in a market maker buy model. Think about the logic here. We were in a market, we were in bearish conditions, and we seen bullish price action on the 1 minute, right? So bullish price action on a lower time frame when the higher time frame is bearish is retracements. Okay, so we're looking for the expansions to be bearish. So notice price rallies into a bearish PD array, two overlapping bearish PD arrays, and then when we get closer to the times we actually look to execute, we'll notice 9 o'clock, we have our turtle soup inside the PD arrays. That's our entry. Super high resistance day, so price is extremely choppy. So honestly, not the best day to trade, but if you're good at what you do, price on these days are navigatable, right? It just takes a lot more guts, right? So even if you entered here and you've already taken partial here, you're waiting for the London sell side liquidity to be your last partial, right? Or your final TP. And even if we watch price aggressively trade all the way back up into this initial sell side liquidity and these first fair value gap of the day after 9 o'clock or after 9:30, your stop loss should be either above the high here that forms and respects at the 50%, okay, or you should place it above the imbalance here, okay. Either or is fine, and even on a high resistance day like this, price still respects those highs, okay, before then expanding towards London sell side liquidity. Okay, so if I were to take a trade that day, this would be the trade that I would take. This is what I'd be looking for. Um, and yeah, things like this often occur where price is super choppy. A lot of people blow accounts and a lot of people lose a lot of money because they get caught up taking advantage or trying to take advantage of over trading on days like these, and it ultimately does damage. Okay, so as long as you're understanding and taking note of what trading conditions you're trading in, you should have no problem um, when you realize these market conditions are at play. Okay, notice even if you weren't to get your golden entry up here, for the intermediate students or the less experienced, you could always enter at this fair value gap here, which is the first presented fair value gap of the day. Okay, you could enter at CE, the upper quadrant, anywhere inside of this imbalance is fine, right? And then your stop loss should be at the high that turtle soups inside of the imbalance here. Okay, so even if you took your entry at the imbalance later, it could have been even after we have already taken out this sell side liquidity here and you entered after 10 o'clock, right? Those of you who trade the 10 o'clock hour of 3, okay, you could have waited until after 10 o'clock. You could have waited for price to retrace yet again into the first presented fair value gap, okay? That's nested above initial sell side liquidity that we've already taken out and traded below, okay? Price respects the 50% quadrant of the first presented fair value gap and then moves lower. An entry here stops above the imbalance, okay? Targeting London's lows is still enough to do some damage. Okay, so that's basically the rundown for December 19th. That's how I would have traded it. And just remember, I'm going to be doing at least one of these every day or every other day. I'm going to try to keep up with the important days, the ones that I feel like we should go back and look over, and the ones that might need a better, you know, explanation behind how you can trade these days in the future that looks similar. Okay, so hopefully I'm doing this to help you guys, and maybe it truly can help people in the long run. If you haven't already, in the description of this video is the free Discord. Okay, inside of that free Discord, you can get access and claim your spot in my private mentorship, as well as get a course. Okay, not only will you gain private mentorship access, but it's for lifetime. Okay, so you get my latest course on quarterly theory and how I use quarterly theory when I'm trading the actual markets. Okay, and how SMT is correlated with quarterly theory and why it's so important to understand that, to understand how SMT truly works. Okay, so if you want to know, you want to learn the stuff behind SMT and quarterly theory, really recommend you check that out. It's only around $85. Okay, and like I said, that comes with lifetime private access to the mentorship. Okay, but without anything else being said, hopefully you guys have enjoyed this video. Maybe you've learned something from this video, as well as, um, you know, you can use this video to your advantage. Okay, now I am going to go back over here to where we turtle soup, or where I have the turtle soup abbreviation. For those of you who don't really understand turtle soup, I'm gonna mark out the highs where I'm talking about turtle soup, and I want to just show you that as buy side liquidity. Okay, I don't want to confuse any of you with the term turtle soup. You don't need to know the term turtle soup at all in order to be profitable. Okay, it all starts with just a sweep of liquidity. Okay, in this instance, this would be buy side liquidity. Okay, so price upon 930, we start to rally above an old high, which is buy side liquidity. Price after 930 rejects away from this liquidity. As price displaces away from this liquidity, we are now bearish, and we are now looking for short entries or short-term trade entries inside bearish PD arrays, okay, at respecting price levels. Okay, it's as simple as that. That's all you need. So price sweeps buy side liquidity, and now we're targeting sell side liquidity. It's simple as that. But without further ado, hopefully you enjoyed this video, and I'll see you guys in the next one. Peace.